Thank you, and a very warm welcome today for joining us, all those who are joining us for this event, Innovations in Mobile Banking in Africa. I'm Nicola Pogson, and I'm Director of Alumni Relations at Imperial College. Now, we know that alumni and friends in the Imperial community really value exposure to thought leadership and insights from Imperial and from our global community. So this event shines a light on the innovations of alumni and our invited guest expert working on the mobile banking and digital transformation sectors. And it also provides a platform to share knowledge, ideas, and opportunities for careers and startups in Africa. And we're really excited. We have a very global audience, as you could already see for people sharing in the chat there. We have over 30 countries represented from across Africa, Europe, South America, Asia, and the US, and graduating years spanning from 1976 up to current students. So just a very, very big welcome to all of you. And we're also just delighted to welcome the attaches joining us from across London's African embassies and to other leaders of mobile and challenger banks across the world. We're looking forward to hearing from all of you in the Q&A session later on. So I'm now very, very happy to be welcoming Chris Tucci, Professor Chris Tucci, our event chair today. Big welcome, Chris. Chris is joining us from Imperial College Business School, and he teaches courses in design thinking, digital strategy, innovation management. His primary area of interest is in how firms make transitions to new business models, technologies, and organizational forms. And I know he has some very interesting questions to put to our panel today. We're very lucky to have been able to grab him and have his time. He's the perfect facilitator. Over to you, Chris.
Okay, thank you very much. Thank you very much. Welcome, everybody. Thanks for joining us tonight. We're going to have a look at mobile banking and financial services innovation in Africa through the lens of some movers and shakers in the fintech world. So my name is Chris Tucci, as Nicola pointed out, and I am Professor of Digital Strategy and Innovation, Imperial College Business School. I'm also working on launching a new center called the Center for Digital Transformation. And I've been creating some new executive certificate courses, including one that actually starts today called Digital Transformation, 5 Game-Changing Technologies for Business. First off, let's acknowledge that Africa is huge. It's a diverse, dynamic continent. We can't hope to represent the entire breadth, in one panel. Still, there's a lot going on there. Africa is the world-leading continent in mobile banking. Was 180 million accounts. For example, COVID-19 is presenting many challenges and opportunities in mobile banking and digital transformation of financial services. So, we hope this panel gives you kind of a snapshot into some of the exciting things happening in Africa and in the fintech space, and maybe inspires some of you to jump in yourselves. Let me start with a brief poll here, just to get your attention. Let's try this one. I'm gonna launch the poll, and the question is, how much trust do you currently place in digital banking solutions? This is just for curiosity, for fun. So the first one is, forget it. I only bank at high street banks with brick and mortar branches. The second one, I divide up my money across digital and traditional banks. And the third one is cord cutter. Most, if not all, of my liquid assets are in digital banks. Let's just take a couple seconds here to get your, see how many we've got. We've got 38. Up to 43 people. That's probably about as good as it gets right now. Let me stop this poll. And I don't know if you can see the results here. Let me try pushing the button, share the results. So it looks like dividing up the money is the majority. 72% of you actually divide up your money across digital and traditional banking. And then the rest are divided about equally between only high street brick and mortar and only digital. So thanks a lot for that poll. I'll maybe do one more later on. What we're gonna do now is I am going to introduce our fantastic panel. So what I'm going to do, so you can see the speakers, I'm going to introduce each one at a time, and then I'm going to ask them to talk for a few minutes about their trajectory and what they did, how they got to their current position, how their university experience contributed to where they are now. And then I'm going to come back around and ask them for a current challenge they're working on, exciting and challenging issues. And then we'll have time to ask each other questions, and we're reserving a good amount of time for questions from the audience, discussion with the audience. Okay, so let me start with Natalie Jabangwe, the CEO of Ecocash in Zimbabwe. Nat has over 11 years experience in financial services and technology, including 5 years experience with NCR Corporation, the world's largest provider of fintech solutions to the retail banking industry. And she was also promoted to develop NCR's position in mobile financial services across 52 different markets, reporting to the board via direct reporting line to the chief technology officer. She is a graduate of Imperial College. She has an executive MBA in 2012, during which time she was working on a near-field communication-centric mobile wallet proposition featured at the London Olympics business program. And she has other degrees from Oxford and Middlesex University. And now she's the CEO of Ecocash Zimbabwe. So welcome, Nat.
Thank you, Chris. Absolute pleasure to be here.
Go ahead and tell us a little bit about your trajectory, things that you found useful from your being an Imperial College alumna, how you got where you are, and anything else you want to share.
Awesome. I think I actually decided to do an executive MBA at a time where my career was shifting and turning around. I was a senior software engineer at NCR, and I was really sick and tired of coding and engineering cash machines. And I just actually set up a flagship project and done the architecture for Metro Bank, which is the corner bank, and led the team that did the architecture for that bank. And I really thought we were on the cusp of digitization globally. It was at the advent of Facebook, Twitter, and I thought not sitting on the engineering, but actually sitting on the business side of things would be more valuable for my career. And I remember my boss at the time encouraging me to do an MBA. And I looked across, I was going to go to Judge Business School. And then I wound up coming to Imperial College London Business School because of the science and the tech centricity of the institution. And I think I made a very good decision. And while I was there, my electives were actually specialization in high-tech strategy and corporate turnaround, and the IED, Innovation, Entrepreneurship, and Design course had just been introduced. And I remember it was led by someone who was just like you, my Professor Tucci, who was Baclaris, who was sitting at the European Commission of Innovation in Brussels. And he was also my thesis supervisor. And my thesis was actually a comparative study on mobile financial services and how to turn around incumbent firms into highly entrepreneurial, innovative firms. And as a result of that work and my EID project, I was working on a near-field communication project, payments wallet. It was quite early, but great insights. Went on to transform digitization in NCR, where we did the first acquisition for NCR in digital, 650 million acquisition of Retalix, and our first partnership with PayPal. And then I got headhunted for a job in Africa. We'll talk a little bit more about that, but that's so far as my journey went. And it all started during my executive MBA.
Perfect. Thank you very much. Let's move on to our second panelist, Ngozi Dozie. He's the co-founder of Carbon in Nigeria. Carbon's a leading digital finance platform. In April 2016, ignited consumer finance revolution in Nigeria, which is one of the most promising and challenging markets in sub-Saharan Africa, with the launch of the Carbon app that uses machine learning to score so-called thin file customers. In other words, customers with little or no credit history in real time. So Carbon's a fast-growing business, well-funded. They've raised 20 million in equity and debt in Series A. They have 95 employees spread between Lagos, London, and Palo Alto. And Ngozi is a graduate of Imperial College London. He has a bachelor's in physics, and he has other degrees from the Wharton School and from Oxford. So welcome.
Thank you very much. Good to be here. Thanks for the invitation, and good to be back at Imperial College. So I did a BSc in physics, but professionally I went into finance, so accounting, banking, and so physics didn't really help. It was useful in getting people to believe that maybe I was intelligent, but it didn't really help. And then ultimately stayed in finance. And if I'd known what I'd known, with the onset of data science right now, that physics does help in giving me that scientific background for some of the machine learning investigations we're doing as part of our Carbon. But in terms of background, I actually worked with another brother for about 4 or 5 years, doing distressed investing across Africa. And the more we tried to find companies to invest in, the more we realized that the big opportunity that nobody was doing at the time, this is pre 2012, was consumer finance. And so the more we looked, the more we thought, look, there's a huge opportunity. The big banks are not really interested right now. And so we actually decided to set up Carbon. It was called One Credit at the time, and the goal was to provide, financial services and more for the underbanked, and the underbanked are a lot. So that's us. I'd love to talk more with yourself and the other panelists as we progress. Thank you.
Perfect. Thank you kindly. And now let's move on to Uzoma Dozie, who's the chief sparkler at Sparkle in Nigeria. He's an experienced financial advisor and entrepreneur at heart who believes in technology and the African spirit. And he's worked in key segments of business development, corporate banking, commercial banking, and retail banking. He's a strong advocate of financial inclusion. And he's currently on the board of Women's World Banking, and he's the former CEO of Diamond Bank. So it's always been his priority to ensure that women in the workplace get the same opportunities as men. Uzoma earned his MBA from Imperial College Business School, and he has other degrees from University College London and the University of Reading. So welcome, Uzoma.
Oh, thank you very much, Chris. Thanks for having me here. And it's like close to 20 years since I did my MBA at Imperial. And now how has that helped me? I think it started helping me only a couple of years ago, when work that we did in terms of I know that one course that Imperial started then was entrepreneurship, which I didn't pay much attention to right now. So I wish I could have those notes now. I wish we were really digital then. So all I had to do was actually just type in entrepreneurship. But along the way, those 20 years. I worked at Diamond Bank for 20 years before I left as MD, and one of the benefits was that I never saw myself as a banker. I saw myself as using Diamond Bank as a platform to drive change and impact, especially in areas like retail. So we transformed Diamond Bank from a commercial to a retail bank, and to do that, we actually had to leverage on technology. So every year when there was new technology, so I remember when we started and it was like branch banking, then was ATM, then was card, and then we moved to mobile. In fact, when we left, we probably had more mobile customers than any other bank in Nigeria. Now, so that helped. So in starting Sparkle, which we started this year, it took us like a year to build the solution. I think we took the learnings from traditional banking and then leverage on technology to unshackle ourselves from the constraints of traditional banking, which stems from infrastructure, even the culture as well. So just getting people, and how do we leverage on artificial intelligence now to not only scale, especially where we're trying to scale services and products for millions of Nigerians who don't have access to support services, but also how we democratize some of these services that were probably the privilege of a few. And so that's what we're trying to do at Sparkle, playing our role in transforming how we can use technology and platforms to really develop people and businesses in Nigeria.
Perfect. Thank you kindly. And now our last panelist is Stone Atwine. He's the CEO and founder of Eversend, which is based in France. He cut his teeth in fintech with Pretoria-based loan management vendor Payment Solutions International before consulting for multiple banks like Stanbic Bank, Barclays Bank, Standard Chartered Bank in Kenya and Uganda on using technology to improve loan collections. He's also co-founded Yetu Credit Finance and userremit.com used in Uganda, Kenya, and Rwanda. He's a 4-time laureate of the Paris-based Institut Choiseul as one of the young African leaders who has had major impact on the continent's economic development. And in 2017, he was selected by the government of France as an exceptionally talented entrepreneur, and he moved to Paris to found Eversend, which is Africa's first neobank. He's a degree in computer science from Mbarara University of Science and Technology. And we first met at the LIFT conference in Geneva, and we also interviewed Stone for my MOOC, for my massive open online course on entrepreneurship way back in 2015. So good to see you again and welcome.
Good to see you. Thank you very much for having me. Yeah. So I guess I'll just jump straight into, that was a very comprehensive introduction. I'll jump straight into school and how university helped me. I think the main thing has been around, so I studied computer science, and that apart from meeting interesting people at university, basically how to think about complex problems. That has been, I think, extremely interesting. And obviously having gone into computing and computer science, it's taught me how to think through problems around, programming, how to deal with coders. I didn't end up becoming a computer programmer, but I have to work with a lot of software developers, and that helps. That helps a lot. It's very different. I think that these days, you can get online and do like a MOOC and kind of pick up a lot of programming skills. In our time, that's something that you basically got out of university, and that was super critical for me, and how I've developed and how I think about the challenges that we face.
Fine, thank you very much. So let me go back around the table once more time and ask you to tell us a little bit about a current problem, current challenge, something that you're very excited about. Why don't we start with you, Nat, and tell us a little bit about what you're doing now and what is something that is very exciting or challenging for you.
Great, thanks very much, Chris, for that question. I'm currently the CEO of Ecocash, which is the largest joined the firm when it was only 1.5 million customers. And 9 years later, the platform's got 11 million users, and we drive 80% of Zimbabwe's GDP. We're bigger than all the banks in Zimbabwe put together. It's a surreal place to be in. When we started building up this business, all we were really angling for was an IPO on the local Dozie, so 100 million in terms of revenue, and now specifically going for 3 million customers. By the time 300 million. And what has been 10% financial inclusion, traditional banks in 100 years had not done what we did in the shortest possible time. So you can imagine, typical of digitized businesses, if you look across, think regulation inside. And with COVID-19 pandemic and most countries looking inwardly, we found that our government has really started to look at monopoly-like businesses. New regulation has come through for us. We've been asked to close down our agents. and a payments wallet. I've been asked to choose one. And these are, when you're building for scale, sometimes you don't actually think what the end in sight will be and what it means if you're going to become really big. Google's faced these problems in Brussels with the European Union. Mark Zuckerberg's found himself in Senate time after again, markets on account of regulation. So this is the new biggest challenge. What loses me sleep at night is that we're not sleeping on account of regulation. How do we save the core? And even though we've been so successful regulators. Yeah. So that's about it at the moment.
Okay, excellent. Thank you very much. Thank you very much. You broke. I think you broke up. Hopefully, actually, I don't know if it's better or worse. Maybe it's better if I'm breaking up but I think you were breaking up a little bit there toward the end. But thank you very much for that. We'll come back to that in a minute. Let me ask Ngozi to comment.
Yeah, thank you. So the we called the brand Carbon because carbon is fundamental to human life. It's found everywhere, and it's also very flexible, and that's our promise to our customers. Trying to execute on that promise, I think there are two challenges that we're facing right now. One is building the trust amongst customers to see us as their main banking relationship. With the move to digital banking, everybody hates their bank because the friction, fees, etc. But they also trust their banks because over the years they've spent a lot of money building that brand. The branches actually give that sense of security, etc. So one of the challenges is trying to get your typical consumer to say, despite the fact that I don't see you anywhere, I only see you digitally, I'm actually willing to give the bulk of my salary, fund, savings to you. That's one challenge. I think the second challenge is, we're trying to become a bank for Africans on the continent and in diaspora. So whilst we started in Nigeria, we've got operations in Kenya and just recently Ghana. And taking that platform and trying to provide the same level of service, trust, etc., in different markets, you need to really respect, the local dynamics and the cultural differences. And it's one thing to say, transfer from A to B, but every market is different in what's acceptable, what seems trustworthy or not. And so those are the two challenges. It's really all about, providing that global service, in a manner that's local and trustworthy.
Yeah, that's excellent. Thank you very much. Let's move on to Uzoma now.
Okay, so well, besides having Ngozi as a competition and lots of digital banks springing up in Nigeria. I mean, this is Africa, so Africa has a lot of problems. And in Nigeria is a big landmass with 200 million people, with different infrastructural problems, with different cultural, with different languages. So, to scale with these different factors is a challenge in itself. And so it is, where do you start? Where do you create that critical mass? But beyond even all that, you're looking at, for me, it is always going to be, how do you get the regulator to actually adopt very quickly, because digital is actually far? How do you also, I think Ngozi has mentioned as well, how do you gain trust? And trust is across all the stakeholders. It's trusting getting trust from the regulator, getting trust from customers as well, to switch from how they've been traditionally safely doing their things to something that will benefit them, and you actually have to show them. So education is actually a key part. And how do you integrate education into that whole packaging? But for the biggest one too is also culture as well. Culture cuts across education. So that education means like you have to like in Nigeria, for example, it's how are we going to leverage up digital to educate people in 4 major languages with different cultural consideration when it comes to whether you're atheist, Muslim or Christian. So those are things that we think about every day, and thinking, okay, which one do you actually prioritize, and where are you going to get your biggest bang for your buck, for the resources that you deploy. So that's what we're battling. But I think digital is also helping us do, I mean, we can talk about it much later, how we're trying to use the new technologies to break through these challenges.
Yeah, great. Thanks a lot. Stone, how about you?
Yeah, so it so happens that we are pretty much all trying to do the same thing, bring financial services to people on the continent and also off of the continent around the world. And indeed, we pretty much have the same challenge. So in addition to what Ngozi and Uzoma mentioned, I think still the same problem, but I'm going to be more specific and go around regulation. That's a massive, massive problem. Our startup is quite different from Carbon and Sparkle because we started from day one with a multi-country, multi-currency approach, whereas these other guys kind of build deeply within one market, capture a substantial volume, and then move into other markets. So we started tackling the problems that they are tackling from day one, which makes your journey extremely difficult when you have to tackle all those challenges across different markets. So we are operating in Uganda, in Kenya, in Nigeria. We are looking at going into Ghana as well, Tanzania, Rwanda. And so that makes, creates a massive issue around culture, trust, like they mentioned. Every country is different, so you have to localize your platform. But even beyond that is that in all these places, you have different regulatory regimes. And that is extremely painful when you have to deal with multiple regulators who may not necessarily understand what you're trying to solve or what problems you're coming in. So I think the regulatory issue is a real big one and extremely different across the continent. You have some regulators you'll talk to and they'll give you a reply 6 months later. You have some that you'll talk to and they'll say, can you fly into this city and we meet next week? So it's crazy like that. I think the other challenge that I see that is a massive challenge across the continent in terms of financial services is the lack of infrastructure. So some guys in Europe who are building, in Europe, you might go to Mambu or Solaris or any of these companies and they'll give you a platform and then you build on top of that. You could have your digital banking alternative in 3 or 4 months by building on top of a platform that is already well built, where you can issue cards, do transfers, issue IBANs and everything. In Africa, it's a whole different story. So there's no infrastructure. You basically have to build these. You have to go to Natalie and say, hey, can we plug into Ecocash? And then you have to go into Uganda and talk to MTN, and then you have to talk to a bank, and then you have to go to Nigeria and talk to somebody who's going to help you plug into NIBS. And that's a massive, massive nightmare. So we've had to build infrastructure as we also build the app. It's like 3 times more difficult to build on the continent than it is to build in Europe. But yeah, those are some of the challenges that we're facing.
Okay, excellent. Thank you very much. And Nat, I don't know if you I think you may have had a slight internet hiccup there while you were talking, and I kind of missed the part that you said you were talking about regulation yourself. I'm just wondering if you could give us a little bit more idea about your take on regulation.
Thanks, Chris. I'm sorry that I'm having a storm in Harare. It's a massively raging one with thunderstorms and all. Hopefully this will hold up. But I think our biggest issue is that we're now a monopoly leader and a market leader, bigger than all banks put together. And the regulator really would like to demonopolize the environment. And that's been our single biggest challenge. And like Stone and Uzoma and Ngozi have talked about regulation in Africa, it is a really, really difficult space. First of all, digitization that we're dealing with is nascent in its life cycle development. And so there isn't great understanding and exposure on it. Some regulators know what they're doing, some regulators don't know what they're doing, which makes it all the more complex. But I do think, you know, all tech businesses globally are facing real issues with regulation. And it's how do you think about reg tech and reg innovation so that you're thinking about it with the end in sight, so that you actually don't kill the baby and the bathwater. And I personally think the worst thing that could happen is when regulators are on the wrong side of innovation, and that is predominantly true on the African continent. And yet there's so many opportunities, particularly with the mobile cell phone, where you have more cell phone devices than you have toothbrushes. You have, and so that has enabled actually users to leapfrog and highest penetration of internet connectivity, which has really made the difference. But the regulations got to catch up with the innovation. Yeah,
thanks a lot. I completely agree. And I actually think that you've all highlighted the fact that it's kind of it's a real issue. I think it's not just an issue in Africa. Actually, I even worked on something like this for the European Commission at one point a few years ago, trying to understand the role. And I guess the deal with regulation is it's normally set up to do it once, you know, and then wait, and then for 50 years, you know, it's kind of, regulation isn't quick to respond right now, you know, in that sense. And so I feel for you when you're trying to move across borders and you're trying to change jurisdictions and you've got to deal with different regulatory regimes. So that combined with culture, sounds like those are the two biggest frictions right now for your pan-continent expansion somehow. Let me ask you if you have any questions for each other before we open it up to the audience, or if you have anything else that you would like to discuss at this point.
Yes, Stone, can we build on your infrastructure since you've taken all the pain already?
For sure, definitely, definitely.
So my question to Stone, I was going to ask Stone. To start going across countries and you're looking at different currencies, different regulators. I mean, what concerns do you have now with COVID now and people locking down and people looking more inwards now? Is that helping? I know that COVID is helping people look at digital, but it's also driving people to look more inwards into their own countries instead of looking outwardly anymore. So how has that impacted your business?
Yeah, I think what we see is Africans, I don't know, it's probably all people around the world. Africans are generally very mobile, like we move a lot. There's so just a few key reasons why we decided to focus on multi-country and multi-currency play from the very beginning is that we looked at the problem of cross-border money transfer as the initial problem that we were trying to solve. And we realized that there's amazing ways to send money from, from London and New York and basically Europe and North America. It takes you, seconds to jump onto TransferWise and push that money to Nigeria or to Ghana. But we looked at some numbers, and then this problem became interesting when we realized that about 43% of the money that goes into Africa, that is received into African countries cross-border, is actually coming from other African countries. And we also realized that there was basically nobody using technology to try and solve this problem when we started thinking about the problem. So we said, if we are going to do, cross-border as, if we're going to solve the problem of cross-border money transfers as the first thing that we do, then we definitely need to be in multiple places from day one. And we also need to be multi-currency. So that was the thinking, looking at 70% of Africans leaving their countries are actually moving into other African countries, which is super interesting numbers. And so we looked at the problem is big, and we say, hey, let's solve this problem. But then that also makes it much more difficult to solve. So with what I was going to say with all this background is that all these people that are moving around and all these people that need to move money across borders still have that need. So the need is there. It's a massive, massive problem across the continent. Obviously, there's tons of challenges around that. But what we see in the market is that the need for the service is there. So then the next thing is, how do you deal with whatever challenges that come your way? You know, currency, regulators. Nigeria is a very interesting country right now because of the different rates in terms of Forex, where it's crazy because, you know, you can collect $5 million worth of Naira and it's worth 0.2, you know? So there is some serious problems. I'm had to look to do you collect this Nigerian Naira and buy Bitcoin or some cryptocurrency? Is it more stable? Is it going to grow while the Naira goes down? It's something that almost everybody who's working tech, I think even together with you guys, is actually facing. Yeah, but we do have to find solutions. The problem is there. We just came and said, let's solve this problem. It's more difficult how we've dealt with it. It's just how it is.
Fine. Let's take a couple of questions from the audience. And if you have anything else that you want to ask each other, just go ahead and signal. But here we have a question about Moja Loop. And Moja Loop is an open source software for payment interoperability. And so the question is Moja Loop project going to help the Pan-African payment connectivity? Anybody want to comment on that?
Maybe I can take that one. That is from the Bill and Melinda Gates Foundation. We've personally made an assessment of it, and we don't necessarily believe that it's going to drive the market scale that is required for Africa. But there are a lot of open platforms, initiatives that are being built right now on the backdrop of the Africa Free Continental Trade Agreement. My personal belief is that it should be driven by market leaders. So the kind of work that Stone Atwina is doing, setting up private market platforms. You've also got the likes of MFS Africa who are building similar platforms. It's really about replicating what incumbent firms like Visa and MasterCard have been able to do, in my view, and building ecosystems as opposed to actually driving it from a policy angle, which is where I think it is coming from. So that is my personal view. And there is, seeds of the spirit that I've started on the continent in terms of building interoperable platforms. Telcos are coming together and trying to build these ecosystems. Banks coming together, trying to build these ecosystems. Personally believe that it is a matter of time.
Okay. You just went on mute, but thank you very much for that intervention. I forgot to mention this was by Drago Indic in London, this question. And Jay Wiza says that if they can implement it and agree to it, then he or she thinks that it's yes, it will help. But he says, or she says, the challenge is not technical. Here's another question that was upvoted a lot right now, which is, do any of the panelists look to reach the unbanked who may not have access to smartphones and internet?
Yeah, anyone? I'll just go ahead and take that. So when we started out, one of our main things that we wanted to do, was to build our platform on USSD as well, which is basically making it available on the $10 phone that can be used by anybody who might not have access to a smartphone. To be honest, we were quickly punched in the face. This is something that we would like to do, but again, looking at the market, especially in East Africa, I think Nigeria might be different, or in West Africa it might be different because there's some regulatory play there, but we found that the telecommunication companies would possibly charge you more to run the USSD session than any money you would ever make from a customer. So this is something that, in my opinion, we can play around with. We've done it in Uganda, where you can access some of our services through USSD. But I think from a cost angle, this is something that can really be done by telecommunication companies. Because of all these learnings, we made a cautious decision that it just didn't make sense for us to try and compete with telecommunication companies for services. So our new angle is, how do we provide the infrastructure on top of providing it to Ngozi, also provide it to Natalie and Ecocash, so that Natalie's customers can make that transfer to another mobile money platform or a bank account in Europe or something like that. So that's the thinking on top of this. Number two, and just being super honest, is that when you think about the financial, just fundamentally, if you look at the finances, the people, Natalie may disagree with this, the people that you're targeting with USSD, for us, their average revenue per user just does not justify trying to provide that solution in terms of acquiring that customer. Again, the telecommunication company has a massive advantage because they already have this customer. So they're not, trying to blitz scale to 20 million people. It's people that they already have. So for us to go out there and try to reach those people through USSD on a separate platform, it basically will never make financial sense for us. So while this is something that we would like to do, I mean, we started out, it's even on our website. If you look at eversend.co, you will see that $10 phone. But we quickly did the numbers, and for us as a company, it just doesn't make sense. On top of that, we think, we see that smartphone adoption is accelerating across the continent. We see new OSs like KaiOS that are super interesting. Maybe you can build for that. We see that the cost of the internet is going down. So then the other question that comes up on top of all the cost considerations is, does it make sense to build for a massive market that is actually dwindling, that is reducing, because a lot of people are adopting cell phones? Can you build fast enough to create real impact for USSD if, for example, in 3, 4, 5 years, a massive percentage of the market will have smartphones?
Yes, thanks.
I kind of disagree with that, but maybe because, we're born out of a telco operator. And obviously we run our platform on the network. But we've actually been able to do things differently for startup players. We've offered APIs where they actually build the menus on our USSD. So we're actually paying because we are doing the hosting. And I think it is important for banks and telco operators to facilitate for that. And Stone at the beginning of this was saying, he's had a hard time going to the likes of us, the Ecocash, telco operators and banks, and saying, hey, can you host me? But you got to do this country to country. And I think this is something that fintechs and new startup codes have to push for. It is quite difficult if you're not an incumbent and if you don't hold sort of like the customer base. We've also seen that 80% of our transactions remain on USSD, even though we have a smartphone offering, simply because when you have connectivity disparity across the country, on 2G and 3G, you can have a really good experience, as opposed to intermittent connectivity, sometimes on LTE. It may not be as good, and it's expensive to roll out in the rural areas. So my view is that the ability to negotiate with telco operators is important, and telcos have to change and host on behalf of new fintechs.
Great.
Yeah. That's exactly the gameplay that I think works, but not us trying to build, USSD channels by ourselves. We have to get onto your menu. Then things get really interesting. Then we have 20 million customers overnight.
Yeah,
Okay, let's move on to.
You need to have good coffee with the telco operators. Oil them a little bit.
Let's hear from Uzoma. Yeah.
I was going to say, I mean, you know, like I strongly believe that the future of Africa is digital, and I think that laying digital infrastructure is as important as building roads. So first of all, we need a very strong mindset, because I don't think that we can grow as a continent using on a USSD infrastructure. It has its constraints. It's like a branch network. And so we have to look at it from a different perspective. Now, you know, trust is very, very key. And before we even go to the unbanked, there's a reason why people are unbanked, because the infrastructure is not there. And so before you're even banked, you have to feed, you have to have health, you have to have all that. And it is based on identity. And so now we even have, so in Nigeria, we have 200 million people, we have multiple identifications. So on any platform, it's how do you trust people? So for us, the only way to do it is digital. And we've seen a lot of investments in digital, and India is a very good example where USSD is not a solution because they have internet access everywhere. So it means now that all the stakeholders, government, private sector, fintech, traditional banks can use that new platform, right, to now educate people, get identity, include people socially before you start thinking of how to actually get them to open bank accounts. Because as far as I'm concerned, a bank account is of no interest to me if I don't have good health or I don't have education. Education is actually needed to build trust and to get people to be able to sustain themselves.
Yeah, thanks. Ngozi, did you have one last comment on that? I saw you may have turned off you turned on your microphone a couple times there.
No, look, I think all's been said, so good to move on.
Great. That, by the way, that was from Ike.
Chris, I don't know. I mean, I like this debate, and maybe I just need to add something. But actually, when you look at the Maslow's hierarchy of needs in Africa, it is a little bit different. For some people, they're actually quite happy to have a bundle of internet and speak on WhatsApp before they have healthcare. It varies. The priorities of what people want are not as complex as some developed markets. And we've been able to grow a business on the basis of that. The fact that someone wants to just buy airtime, and if there's a good incentive on a platform, that could be much more important than having healthcare. Africa's largely $1 a day market. It's largely prepaid. If somebody can eat their way through a day and, buy those tomatoes, sell whatever they sell, a day and prepay their way to life, it is predominantly that kind of model. So I kind of disagree with that, because I have found that, at least in our country, in Zimbabwe and mostly Southern Africa, the priorities are very different. To my point, people have more cell phones than they would prioritize a toothbrush. That's not such a bad thing. Communication is more important for them. And these are some of the numbers that we've sort of taken a look at. And in this COVID-19 pandemic, we found that education acceleration was much higher in our country because we were able to disseminate on mobile cell phones, and people had these devices. And so it was actually an advantage as opposed to ability to have healthcare or healthcare insurance, for instance.
Great. Thanks a lot. By the way, that was the question from Ike Chukwu Uche. Now we have a couple questions here about regulation, just to get back to the regulation discussion that we had. The first one, I'll just read them both. So that way you can comment on whatever part of it you like. The first one from Rushab Mehta. He says, what exactly are regulators attempting to control? For example, in Ethiopia, only banks can handle mobile banking. Is that something that regulators are pushing for? And what differs between the regulation in different markets? And the second question is from SP, and it says, is there a country that seems to have a better approach to regulation or a more favorable environment to develop for mobile banking? Any takers there?
Yeah,
Dozie, do you want to go first?
No, go ahead. Yeah, please go ahead.
No, I was asking if somebody else wants to take it, so do it.
Go for it.
Dozie,
go ahead. Yeah.
I can't speak to Ethiopia, but in terms of regulation in different markets. So, like I said, we have tried to get licenses in where we got licensed in Ghana, one in Nigeria, and we're just about to finalize one in Kenya. And the truth is that the different ecosystems dictate, the behavior of the regulator. If you look at Kenya, you have, a regulator that allowed, the financial, retail finance to be dominated by telcos. The Nigerian regulator has sworn that this will never happen in Nigeria, right? Ghana is probably, somewhere in the middle where you have a nice balance between the penetration of mobile money, whilst the banks are still there. So I think I know this Stone alluded to that point is, I think different regulators are good for different things. In Nigeria, you have a fantastic payment system. They focus on that. They've said, we don't want mobile money, or we don't want telco-led mobile money. But, quite frankly, there's almost little need for mobile money, at least for the general populace, unless you want to go into the unbanked. Because P2P transfers have been, they're low cost, whether it's via USSD, the banks have actually been very nimble in many cases. I think one thing that we haven't seen across all markets is the real adoption of regulatory sandboxes that will allow companies here to say, okay, we're not sure about cryptocurrency, for example, but hey, we'll allow X number of companies to try it out with our blessing and see if it can actually truly have an impact to the ecosystem. I think only Egypt is the country where we've seen the regulator actually walk the talk. Beyond that, I think there's been a lot of work with the likes of the World Bank, IFC, working with different regulators, but not much has been seen, at least from us as operators in plugging into the system and going on the edge to see what can be done.
Yeah. Oh, by the way, I guess I should have mentioned this earlier. USSD, for those of you who don't know, it's kind of like a SMS message. It's a non-data channel use of the telecommunications that people use for financial transactions. So just in case you were wondering what USSD is all around, that's what it is. Any other comments about cross-country regulations? Yeah, Nat?
Yeah, just to, I think, buttress what Ngozi said, like spot on in the countries, you're absolutely right. I was going to repeat the same countries as well, what you said, so I'll belabor on that. But I think there are two other things that really pressurizes regulators. It becomes a political economy issue. Market control and market concentration issues can actually become a risk to state security. And I think the lack of understanding on these fintechs and new technologies and aspects on cybersecurity actually do threaten regulators, traditional regulators who don't know how to deal with this thing. So I think it transcends the innovative benefits. And most regulators really actually start to think about, what does it mean for monetary policy and monetary supply? What does it start to mean about liquidity holdings? If they're held in fintechs and they're not held within central banks. Kenya has been easier because Safaricom is owned by the government. That's why that has been different, because it is actually sitting within the state. Go to any other place where it is not a government-led telco operator, there are big issues once you start to scale. And so I think those dynamics around market concentration really have to be thought about through and through. And then we have to start looking at aspects like interoperability right at the beginning, so that you're actually covering for market concentration and then making sure it doesn't become a political economy risk.
Yes, yes. Yes, Uzoma, another comment?
I mean, the regulator today probably has a more difficult job than he had 20 years ago. And if you're saddled with the responsibility of trust and stability, it means, especially because first of all, you're dealing with people's monies. So like I always say, like, no matter how creative and innovative we are as financial services, we have a fiduciary responsibility. We're taking people's money and we're saving them. And if that trust is broken, then you'll have stability issues. Now, with all these different solutions, innovative solutions that are being thrown at them, it's which one is priority, which one is going to scale, which one is going to cause the least disruption in the market. And so like it's a very, and so that's where a lot of, and so like what is the solution? It's advocacy, it's education. And especially in central bank where they're probably not learning as fast or absorbing as fast as private sector companies whose job is continue to be dynamic, to be very flexible, while the central bank regulators are to create stability, to ensure trust, to test and learn before they allow something out there. And then when you have lots of solutions being bombarded at you, it becomes an issue. So there needs to be a bit of understanding and knowing that this is something that is not going to really go away tomorrow.
No, I actually, I think we should agree that regulation overall isn't necessarily a bad thing. There's good and bad regulations that make it more difficult to do things in digital banking, mobile banking, et cetera. But, there are plenty of regulations that are actually good. And sometimes it's a little easier in one place or another. They allow experimentation more or less. And that's the kind of thing that we're talking about here. Let me move on to the next one, which is Stephen Caleb Katurebe says, can any panelist talk about the place of NFC, near field communication, in mobile payments and the future of it on the continent?
That's Natalie.
Look, I tried to build an NFC wallet while I was still in university in 2012. Very premature, didn't take off. And when I took on this Ecocash here in Zimbabwe, we launched NFC payment tags. I think maybe you might be able to see one at the back of my phone. And we do have, these, it's like the Oyster card basically. And it's just not taken off yet in our market, but we continue to test. We're about to try it out on wearables. We'll see if it makes a difference. But I think the idea is iteration, continuing to improve, being ahead of the market and trying different kinds of things until you sort of hit the sweet spot. But I must say, twice now, failed heavily. But I think the quicker, the sooner you fail, the better you get to your best set innovation. So there's room for it, but yeah, I think it's going to take time.
Yeah. Thank you.
So there was, in my last life, similar to what Natalie said, we piloted the NFC initiative with a company that was driving out the market. But the problem with that is that you actually have to build the market as well. So it means that if the existing competing solutions, to scale is going to be an issue. Now, I think one of the things that the regulators has said in Nigeria is that all cards that are produced from 2020 have to be NFC enabled. So that means, that is the regulator actually now trying to help build that market. The second bit about what we need now are common standards. Those common standards will allow us, right, to now, for anyone who wants to play in that NFC field, whether it's their mobile phone, whether it's their cards, or whether it's their point of sale terminals, so things can start talking to each other. And when that does happen, that's where you're going to see, it's actually quite needed because you're going to see a reduction in the cost of payments, and you're also going to see a more adoption of digital and electronic ways of making payments. And we already have, so for example, we have a road that is also has NFC enabled payments. So it's just actually using, for example, the same common standards to now build that. Because if I knew what the standards were, I'll enable my chips, my cards, right, to do that. So that will just reduce the cost of doing that. But it's definitely going to be there because the cost of point of sale terminals, especially in Nigeria, is very, very expensive because you have to import these things. And so where I also see a big opportunity is not NFC, but also QR codes, where you don't actually, everybody has a smartphone. A QR code is very, very low cost payment solution, and then anybody can hang it around their neck and then accept payment. So that's where I see opportunities with NFC, QR codes, big opportunities in Africa.
Yeah, thanks. I think, you're right in the sense that, NFC requires a kind of complementary technology that everyone has to adopt somehow. And, the QR code is a little simpler because there it's just, it's low tech solution that enables you with, connect with your phone. Let me launch a second poll now, since I think this is a very, since you've set us off on this, Uzoma, on this topic, I'm going to launch another poll here for you to look at. And this is the, do we have much further to go in digitally transforming the financial services sector? So, you know, the first one is, I expect we've hardly seen the beginning. There's lots more to come. The second one is ho-hum. We've made a lot of progress, but it's diminishing returns from here on out. And the third one is, digital transformation has definitely jumped the shark and at this point is old news. So what do you think? Another couple seconds here. Okay, I think that's everybody who's got an opinion. Let's share the results here. 93%. So that's, that's a, of course, you're self-selected to come to this panel, but anyways, 93% think that we've hardly seen the beginning. Of course, that's where I am. And then we have a few, 2 or 3 people in the audience who are dubious about it at this point, whether or not it will actually pay off. Any reactions from the panel for that little poll? So we move on to the next question.
Well, I will say I definitely agree. First of all, we haven't seen any disintermediation in the financial services sector, and that's what digital is actually going to do. I mean, for us at Sparkle, I mean, like we see ourselves as a platform and not financial services, because in the end, I mean, like people are going to be accessing service from different platforms, and I think the regulations are going to move, not regulating whether you're a commercial bank, but regulating what the activities that you're actually doing. So you probably have a mom and pop shop that says, you know, I want to go into foreign currency trading. So they have to get a license, they have to put the capital aside, and that's what's really going to happen. So we have to be open for that, because what digital is going to do is going to reduce the barriers of entry and increase transparency and trust, which means that anybody can jump in. All you have to do is bring a capital and prove that you are capable of doing that business.
Yeah. Yeah, thanks. Actually, that's a very good segue into the next question from Mag, who says, which financial service has been most adopted in Africa for transactions that a digital market business can partner with? So which financial service has been most adopted in Africa for transactions that a digital market business can partner with?
My experience has been that aggregators like Cellulant are doing an incredible job by actually building platforms. Again, we come back to platforms where they're providing an ability for all manner of payments. And so that comes from bank payments, whether you're buying by airtime, whether it's mobile money, and enabling merchant payments or merchant commerce. And I think that is in the future of transactions going to be actually huge. And we can take cues from that for the trade platforms and the ambitions of the Africa Free Continental Trade Agreement, if you ask me. So I think e-commerce is going to benefit, but my view is that it's going to be the conveners of the platforms that will actually be able to facilitate for this.
Great.
I think it's also like, when I look at it from a banker's working in a banking environment for many years, I think it's savings and deposits. So we've seen a lot of financial institutions partner with, for example, like I remember like people like Konga and Jumia. What do they have? They have wallets. So everybody has a wallet store, because if I can get hold of the customer's money, then it means that the probability of him actually shopping with me is going to be so much higher. So first of all, you start with the client as you start with the company as a client. Then you're collaborating together, and the next minute you're actually competing for customers' deposits as well, because they want that. They want to reduce their own cost of doing business and get some spontaneous finances. So that is one area I think that has been hit hard, and the regulation to hold those deposits are next to nothing. So that's where I've seen a lot of collaboration.
Yeah. Here's one. Dozie Hez says, a very informative session. Is there any plan to consolidate effort in these ecosystems to free up bandwidth for innovation, which the continent greatly requires right now? Is there any plan to consolidate effort in these ecosystems?
Yeah, let me, I don't know. The answer is, I don't know if there's plans, but I have an opinion. And I think the problems we're trying to solve are really massive, massive, massive problems. There's no one who can, solve these problems by themselves. And we've got different skills and expertise. So for example, I know how to move money across borders. Ngozi knows how to, give digital loans and so on and so forth. So instead of carbon building, cross-border solutions, they can plug into our own thing, and then we can plug into theirs to offer those digital loans, and then we can run much faster together and support people. I think there's more success to be gotten out of a group of financial technology startups working together, plug into mobile network operators and banks, some of the banks that are more forward-looking. I see this in Nigeria, for example, where some of the financial technology startups are doing deposit mobilization for banks. The bank is willing to let us, plug into their platforms as long as we give them deposits. So I think there's a massive need for us to do this, but there's also a massive problem with most of the innovators is that everybody thinks wants to solve all the problems by themselves. So I think it takes very special effort and special thinking outside the box to actually come to that conclusion that I will work with somebody that I'm looking at as competition today, tomorrow, so we can work together to solve the problem. Because I think the problem is really, really, really too big for any of us to even begin to solve by ourselves.
Great, thanks. Ngozi, do you have a comment on this, or?
I mean, I couldn't agree more. I think the challenges are huge. It takes humility to appreciate that I can't do it all, and I don't think there's enough of that. And when I look at digital banking, I think we all end up in the same place. I mean, as Carbon, we started out as a vendor, and I think literally every other thing that we've added onto our platform, whether it's P2P transfers, savings, payments, we've actually tried to partner with another party instead. Because we for us, we're invested in lending. It was easier, we thought, to bring other people in. So we built it eventually, but only because either we couldn't buy or there was no trust. And I think it goes beyond the product itself. It's also the market. There's in Nigeria we have 200 million adults, right, or 100 million adults. The truth of the matter, though, is that maybe 4 million, right, are potential customers of Stones. And so as a result, if you want to be that massive company, you then have to go to Ghana, to go to Rwanda, go to Kenya, etc. And you can't do that, on your own. You really have to make sure that, look, who are the partners I can plug in with? And not just other fintechs, but other people in the real sector. And I think that's the opportunity that a lot of us are missing, is that we need to make this relevant. I think Nat, you talked about, Maslow's hierarchy of needs. We believe insurance is under-penetrated, but nobody wants to pay for car insurance and drive your car safely. So what have we done? We've said we will give people health insurance, or at least hospital cash insurance, free, as long as you save a certain amount of money with us, right? As you're saving with us, you're reducing our cost of funds. So I think there are huge opportunities in making these things relevant to the wider community, and I think it changes. So if you ask somebody, do you want to buy life insurance, they say no. But if you say, do you want to buy a product whereby you send your mother money every month, if something happens to you, she will keep getting those receipts, you will say, yes, I definitely want that. So a lot of it is also making it relevant to the individuals. But Stone's point, the collaboration is critical, and everyone has to play a part. So, in Nigeria, the telcos, you want to innovate with them. They say, this is great. I love the idea. I'll take 85% of the revenues. You take 15. I don't care. I don't care what you're spending. And it's actually counterintuitive, because if you flip it, the amount of innovation and people that will skyrocket the level of innovation that's taking place.
Great. We're supposed to be finishing up pretty soon, so I think maybe we'll stick on for a few more minutes, but basically we should probably try and wrap up a little. I was thinking, since we have a lot of questions here, we could just do a quick lightning round. Okay, so I'll just throw out a question and maybe one person can give a very concise response to the question, okay? First one is from Wiza saying, how can fintechs approach USSD infrastructure in markets with restrictive regulation? For example, in Uganda, obtaining a USSD short code certificate will cost $10,000 per year. Is it worth lobbying for regulatory change continent-wide? Anybody have a quick reaction to that?
Yes, it's worth it, but for now, I don't know. Our thinking is just don't do USSD.
Okay. Let me go to the next one. Do the panelists consider cryptocurrency as complementary or competition to their technology for transactions or remittances or other services? That's from Ikechukwu Uche. Anybody have a quick reaction to that one?
Stone.
Yeah, I think I think it's Ngozi who mentioned previously, at the end of the day, we are all going to look the same way. Sparkle, Carbon, Eversend, it's going to be that little bottom thing with your balance here, with send money, with virtual card, with crypto and stock investments there, and bill payments. That's what it is. I think crypto is solving serious problems in some markets where you have some currency restrictions right now. It's definitely not competition. I think it plays in.
Good. Thanks. Here's one from former student Adewole Adedeji. What are great businesses such as yours doing to build financial inclusion for bottom of the pyramid people as a core development imperative in Africa's digitization strategy?
I'll take that one. I think we started off as a mobile money platform. 3 years later, we built on insurance, and we're the largest microinsurance provider in our country. Another 2 years later, we've built up e-commerce. And just last year, we launched logistics via a mobility platform. So I think what we're really trying to do is entrench an ecosystem. So the payment side business has become a platform, but we want to be able to offer other value-added services on top of that. Healthcare. In COVID, we've given a free COVID insurance so that, we can help those that are our customers to actually go through this pandemic more in a much better way. So it's those kinds of interventions that we're trying to build on through deepening financial inclusion.
Great. Let me, I think we better I'd love to keep going on the questions. Maybe we'll have a look at the questions and we'll try and respond in writing to those of you that we didn't make it to. We still have at least 5 more questions there, which is very nice. Thank you very much for all your questions, guys. It's been great. But I want to kind of conclude here, wrap it up a little bit, get the point of view of the panel on what the job market is like for highly qualified African graduates looking to work in your respective countries. So what are the opportunities? Any advice that you could give? What could you and Imperial College actually, as an institution and a community, do to help support the next generation of African students and recent graduates? It's kind of like an Imperial enterprise lab where we're taking technology, trying to commercialize technology. But you may have other thoughts or ideas as well. So I just wanted to kind of wrap up with this kind of general question.
I'm sure if you ask any of us, one of the big obstacles to our growth is people. It's people and it's that knowledge. And there's so much that can be done. So we're always constantly on the look for talent. I think one of the issues that we have is that the people that are coming, say, from the West are demanding, wages that are not, at least not now, commensurate with what we can afford, unless you're in for the long term. So, you come and you say, okay, I need to have a dollar salary or sterling salary. That's, we earn in local currency. That's already cancelled. But to the extent that there are people with relevant skills or the interest, I think in all our companies, there's a home if you're willing to be aligned with the company in eating when we're eating, crying when we're crying.
Okay. I think there's real synergies. We could probably develop, I like the idea of an Africa lab. There is the Breven Howard Institute that's just been launched at Imperial. Every time I'm in London, I visit, and we're actually collaborating with the Winners Project that is building machine learning, satellite data into insurance. And with that team in Imperial, we're actually planning on launching something in Tanzania. We've launched something with them through the Africa Development Bank here. And it was such a sense of pride to have really talented team from Imperial working on this for us, for farmer loans, for de-risking, satellite sensitivity, and all these really cool things. And I think there should be more of that. There's a lot to tap into. And I have a practical example that I'm ever so proud of.
Great. Zoma? Yeah.
Well, I think, like I said, I have that entrepreneurial mindset and entrepreneurship is going to be very, very key because, as organizations, whether it's fintech or whether it's old businesses, as people begin to leverage on digital and businesses transform and the future of work, it means that even existing companies are going to have entrepreneurial people, mindsets, right, to actually transform their companies, right, and change the way they do things and start looking at themselves as new fintechs within traditional organizations or tech, fintech type companies. So that's going to be very, very key. So it's not just the functional perspective, but it's that mindset that's going to be key, and being able to be flexible, dynamic, looking at remote, smart working. Those are going to come into play going forward.
Fine. Stone, last.
Yeah. Yeah, probably not much to add. If you're flexible and dynamic, like Uzoma says, just write to any of the founders and say, hey, I've checked out this company and this is what I can do. We are always looking for talent. It's probably an even bigger problem than regulation at this point for us at Eversend, and I guess for many other people. So we are very happy to chat with anyone who is willing to get their hands dirty.
Great.
Please don't write to Nats. I heard her revenue numbers. She doesn't need help.
I'd love a collaboration, Ngozi, just saying. So I'm going to reach out after this.
All right, collaboration is good.
Listen, thank you very much, guys. It's been really stimulating. And I think I've learned a lot. I think the participants, we've had, the 50, 60, 70 people on board participating in this. Lots and lots of questions, interaction. So let me thank you once again. And I would like to turn it back now to Nicola to conclude our session tonight.
Thank you very much, Chris. I mean, that was such a fabulous discussion and debate, everybody, and made all the more so because we had such great questions. So thank you to our audience as well. And of course to Chris, because he's a delight to work with, and he's such a great facilitator. Thanks for joining us. We hope you enjoyed it. We hope it stimulated ideas for connections and for getting together and insights on what's happening on the continent. So goodbye. Thank you very much.